So this is the US oil analysis for Monday 20th of November. Now let's have a look what happened with prices on the 17th. So on the 17th, I did say we were operating in the shadow of the most recent trend. It does appear to be to the downside, but overall the trend is to the upside, as indicated by, let's use the daily charts for references here. As you can see on the daily charts, we've had a series of higher lows. Of concern, however, was this strong bearish candle. We did have a small retracement, so we possibly would have expected, well, I was anticipating, I tried to anticipate a further retracement before we would possibly see some more buy side momentum. Now, this turned out to be, so on the 17th, we did mention the targets to the downside. But we negated. Hold on a second here. We did negate we pretty much negated the bearish candle here on the daily chart, but we'll go back to that soon enough. So on the 17th, what we did see was prices started to slightly trend upwards, and we did have a breakout to the upside from where we were. So what we did see was we saw that very strong candle. It was precursored by it was somewhat not precursored. We could have anticipated based on the fact that we didn't revisit these lows, and we did start to trend upwards slightly. There we are. It's a very strong break to the upside above the previous swing over here. We've had this consolidation, somewhat pullback, we broke again, and we've had strong moves to the upside. So currently sitting at 56.73. Overall trend being to the upside, and the fact that we've negated most of this bearishness that we've seen more recently. We're looking for potential upside targets. So potential upside targets we've already got marked out here on the chart is in and around at 57.12. So we'll see our prices react around at 57.12, where we do see a retracement possibly down to 200 premium average before we see further buy side momentum coming to the market. Now, beyond which we'll be looking to see our prices react to actually the next major level I'll be looking at is around at 58.28 and 58.56. But before we get up there, we have to see our prices react to possibly this most recent swing in around I think it was in around the crude oil inventories earlier in the year. Well, not earlier in the year, earlier in the month, sorry, in around the, I think it's 8th of the month, and we did have crude oil inventories, and that was all the way up at the 857.90 essentially. So in around the 58, so in around 58 to 58.56, it's a pretty big zone. So I'd say our price directs to 58 first, in around 57.90. We'll see if we do get some bearish buy side momentum, sell side momentum. So if we do get up to 57.90, we do see some selling momentum. We'll be targeting at 57.12 to the downside for a potential move back up to the upside. Now, if we do break down from where we are at present, let's just if we do, let's just keep it coherent. Now, if we do break from where we are to the upside again, we'll be talking 58.28. See our price react to 58.56, beyond which you'll be looking for the major level of that $60 a barrel. We'll potentially see some profit taking and some sell side momentum coming to the market from that $60 a barrel mark. Now, if we do see a turnaround before we do get up there from where we are at present, the levels we'll be looking at below us again is that 200 period moving average, and possibly the 55.73, and again the upper end of the most recent range of the year in around that 55.21, where we have found support previously. So 55.21 in around that 55 region, and also this dynamic level of support around this 200 period average here in blue to target the levels above. Now, let's just have a look at the higher time frames before wrapping up here. So on the monthly chart, we are somewhat bullish on the US oil, also known as WTI. So we've got our lows there, higher low again, breaking above these the trading range that we were above that 55.21, and we've had over these couple of months, the past 3 months or so, we've had strong bullish candles closing near their highs, which is a good momentum sign. And again, we're targeting that $60 a barrel over the medium to long term. So overall, the trend does appear to be the upside. Somewhat looks like an inverted head and shoulders. So again, got a head there, got a shoulder there. We've pulled back there, so you could interpret that as being, this could just be one shoulder here. So we've got a shoulder there, move upwards, a higher low. Again, another bullish sign. So let's just clear that up a little bit. So so we've got a shoulder there, got a head there, got another shoulder. So we've got a shoulder there, come down, posted a higher low again. So we've got low, higher low, again series of higher lows indicating bullish buy side momentum here on the monthly chart. So we're talking about $60 a barrel, just previously mentioned. So we're going to be having a look at the weekly time frame. So over here on the weekly time frame, overall, we can see the trading range I was mentioning. So in around at 55.21, lower end of the range, just down here as well. So we were operating from the lower end of the range. So we've got a lows that's there. We posted a higher low there. Had a brief pullback again, posted a higher low. And over the past, wow, what's that, 5 weeks or so, five plus weeks, we've had a strong bullish move every week, closing near the week's highs, indicating strong buy side momentum. So let's just have a look. We are coming into focus with the 200 period moving average here on the weekly time frame. So let's just see where the 200 period moving average is, as it may act as dynamic resistance. So the 200 period moving average is sitting around at 88.56, as previously mentioned. I think I've got it marked out horizontally on the charts, beyond which you'll be looking at $60 a barrel. Again, we've mentioned that before. So the overall trend does appear to be the upside. We did break out above the upper end of the range, so we'll see how prices react to 200 period moving average, after which we'll be looking at that $60 a barrel mark. Now we're just going to have a look at the daily time frame before wrapping up here. So on this daily time frame, again, it did appear that I placed too much emphasis on this bearish candle here. I did expect possibly further retracement before we would see more buy side momentum, but buy side momentum came back into the market a lot sooner than I anticipated. But over here on this daily time frame, we can see here we've had a series of lower highs, higher highs as well, which is somewhat bullish for prices. We did have a bit of consolidation here before we had a breakout to the upside, and again we've continued to the upside. Now, in light of the most recent trend, I suppose this move downwards, I should have well, I did mention we did expect to see some retracement at some point. So we retraced all the way back down to this major level. Now this very strong daily candle here, which is bullish. We still, I would anticipate, as it has somewhat negated the bearishness of the left of the chart. So we've got this very strong bearish candle, but we have this strong bullish candle. So more recently, we've got the bullish candle, so it will take precedent over the move to the left. Also, it's in alignment with the overall trend, which is to the upside. So we're expecting further upside continuation to retest the levels above. Already mentioned the 200 period moving average on the weekly time frame, as well as the psychological level of the $60 a barrel. But overall, the trend does appear to be the upside. We'll see how prices react to the most recent highs over here in around at 57.92, just below that $58 a barrel mark. So that should wrap up the US oil analysis. Thanks for watching.